Welcome back everyone, hope you're well. The S&P closed the week 45 points from its all-time high. Oil dropped on the day and the ceasefire ended. And NVDA survived the $189 flush to close at 211. If you're not confused by this tape, you're not watching it closely enough. Subscribe if you haven't yet. The watch list is pinned as always in the comments. Every level for next week, no paywall. So now let's start with the quick weekly scoreboard. S&P plus 1.23 to 7,575, Nasdaq plus 1.74 to 26,281, Dow minus 0.5. That split tells you the story. Tech and chips led, traditional names lagged, rally narrowed into Friday. SKHY debuted on the grey market up 13%, META ripped 6%, NVDA recovered a midweek scare that looked in all the way to $189 on the hourly. Oil closed the week at 71.41 down. On a week the Iran ceasefire ended, that's comprehensive, plain and simple. Two stocks, two sets of levels for the week ahead. Stock number 1, NVDA. Thursday's hourly chart showed real fear. Price spiked to $189 and change, well below the 197 long-term trend everyone watches on the daily. Buyers absorbed it. Friday's daily candle is a clean Marubosu. Opens near the low, closes near the high, 148 million shares, closes above the midterm trend at $206, but don't confuse a bounce with a new uptrend. The hourly moving averages are still untangling. ST is sandwiched between MT and LT, no bullish alignment yet. The upper channel on the daily sits at $219. That's the line. Here are your levels. Above 219 on volume is risk on. Chips can run to 236. Between 206 and 219, chop, don't chase. Below 206, this bounce was a trap. Tighten everything. If you got long near 197 to 200, you're up nicely. Start moving stops up to around 204. And now look at stock number 2, META. This is the breakout people missed. From 744 to 520 and back, the stock has been basing for weeks. Friday it ripped 6% to 669 on 40 million shares, double the average volume. It didn't just bounce, it smashed through the daily upper channel at $663. The hourly is even more dramatic, 590 to 777 in a single session with the tallest volume bar on the entire chart. But price is now $40 above every major moving average on the hourly. That's overextended. After hitting 677, it pulled back to 663 to 670 on lighter volume, healthy digestion so far. Your levels, long entry and a pullback to the 628 to 640 zone, where the short-term trend is catching up, or a backtest hold at 663 with a smaller size. If it rips straight to plus 700 without pausing, let it go. If it falls back below 600, the breakout was a fake. The week ahead is loaded. Monday, SKHY officially gets live. 13% grey market pop means sell the news is the highest probably play. For Tuesday, CPI at 8:30 AM, the Fed's already talking tough inflation. A hot number tests this entire rally. Bank earnings all week, JP Morgan, BofA, Wells and their Iran. Oil closed down on ceasefire end day. If military action escalates over the weekend and oil gaps above $76, that entire disinflation narrative breaks fast. VIX is still above 16 on the week, the Nasdaq made new highs. The options market isn't buying the calm. Semis and AI can absolutely run higher from here and test those all-time highs. The momentum is real, but protect profits up here. Don't be the FOMO buyer at 215, NVDA or $680 META. Wait for levels or wait for CPI clarity. Cash doesn't cost you anything going into a week this stacked. Watchlist is pinned as always in the comments. Exact entries, stops, targets, trade the levels. That's the tape. See you soon.